Welcome to my YouTube channel where I study the best investors from around the world. In this week's video, we'll find out how people profit as inflation surges. Today's video is broken up into three key parts. Number 1, understanding the key concepts of inflation. Number 2, why take inflation into consideration. Number 3, how to profit from inflation. Inflation has returned. Today, we'll learn how to make money when prices are rising. First, we will take a look at understanding the key concepts of inflation. Inflation can stretch a fixed paycheck even further for consumers, but it can also mean continued profit for investors as they build their retirement portfolio. Inflation is described as a steady rise in the cost of goods and services over time. In an inflationary economy, a gallon of milk that formerly cost $3 may now cost $4. Over time, inflation erodes the value of a country's currency. Inflation is impacted by a variety of circumstances, and the causes of inflation are hotly debated. In economics, inflation is a quantitative measure of the rate at which the average cost of standardized basket of goods rises over time. Quantity over quality. Inflation is a measurement of a currency's purchasing power expressed as a percentage. Consumers suffer from rising prices because it costs an increasing amount of money to buy the same basket of goods and services year after year. Purchasing power is the term for this concept. The monetary authority of a country, such as the central bank, will work to keep inflation within a range that keeps the economy running and promotes growth. Inflation is necessary because it encourages spending, which aids national economic growth. The Consumer Price Index, or CPI, and the Producer Price Index, or PPI, are the two most common inflation measurement tools. The Consumer Price Index, or CPI, is a monthly report from the Bureau of Labor Statistics that measures the weighted average price a consumer pays for standardized groups of goods, or BLS. The CPI is a metric for measuring finished goods. The Producer Price Index, or PPI, is a weighted average of wholesale prices for domestic producers. The BLS also publishes a monthly report on it. PPI is a good metric to use at any point in the production and output process. Some countries will use WPI, which is similar to CPI, but measures a basket of goods at the retail level, but the United States prefers to use PPI to track inflationary pressures on businesses. Prices are rising as a result of a number of factors. As total demand for commodities grows, supply prices will rise. Costs of manufacturing increases as a result of everything from growing labor costs to rising raw material costs. The majority of customers are concerned about inflation. Inflation, on the other hand, has a positive aspect when viewed through the lens of an investment. As the banking system recovered after the Great Recession, inflation remained low. Inflation has never risen above 2% for several years. Inflation has made a comeback in recent months, although President Biden has described the current situation as transitory. Many people believe that inflation is here to stay. Inflation is defined as a general increase in prices in a given economy over a given time period. The Federal Reserve usually aims for a low and stable rate of inflation of around 2%, which indicates that the economy is growing. However, economic shocks can cause inflation to reach double digits. Inflation has risen and fallen throughout history. Prices rose 10% to 15% in some years during the 1970s and 80s. Inflation has slowed since then. Inflation rates fluctuated between 2% and 5% in the 2000s, while they hovered between 0 and 2% in the 2010s. In other words, compared to other periods in history, prices have been remarkably stable in recent years. Inflation, on the other hand, has recently resurfaced as a topic of discussion. Inflation was 5.4% in the 12 months ending in July 2021, one of the highest rates in many years. There are three main types of inflation. Demand pull inflation. When demand exceeds production capacity, demand pull inflation occurs. In other words, there is a greater demand for goods than current supply can meet. As a result, the cost of living rises. Cost push inflation. When production costs rise, companies find it more expensive to produce the same goods. This is known as cost push inflation. As a result of the increased cost of inputs, market prices rise. Built-in inflation. Workers demand higher wages to offset rising living costs, resulting in built-in inflation. This type of inflation can result in a feedback effect, in which businesses must continually raise prices to keep up with raising labor costs. Secondly, we contemplate the question, why take inflation into consideration? Inflation has a number of disturbing impacts, the most noticeable of which is that it gradually erodes your purchasing power. As inflation takes hold, a dollar will buy less goods and services than before. Long-term investors and retirees both have become more complacent about the possibility of inflation as interest rates have remained extraordinarily low over the previous decade. Inflation must be recognized as a significant threat to a comfortable retirement in the future if it is not adequately accounted for. Inflation adds to the economy's uncertainty. Inflationary pressures compel the Federal Reserve Board to act, which is expected to raise interest rates in response. In the short term, the Fed's actions may cause stock market volatility, and rising rates may cause bond funds to lose value. At the very least, the threat of inflation and increased uncertainty is an additional reason to review your investment strategy to ensure that your assets are properly diversified. A well-diversified portfolio that isn't overly reliant on a single asset class is a good place to start when it comes to protecting your money from inflation. Finally, we take a look at how to profit from inflation. Here are 5 inflation hedges that can help keep you afloat as prices rise. Number 1, real estate. During periods of inflation, single-family homes financed with low-interest fixed-rate mortgages tend to perform well. As inflation rises, the value of your home is likely to rise while the monthly service cost of your mortgage remains constant. This is at the heart of accumulating home equity, which can significantly boost your net worth. You can protect yourself from rising rents by purchasing real estate. Rents, like any other consumable good, tend to rise as inflation rises. Mortgages have an advantage over rental agreements when inflation is high, despite the fact that they are less flexible. Number 2, value stocks. According to some research, value stocks outperform growth stocks during inflationary periods. Companies with strong earnings relative to their current share price are considered value stocks. They're also known for having strong cash flows, which investors prize when stock prices are rising. Growth stocks, on the other hand, are more susceptible to interest rate fluctuations, which is a common monetary policy response to inflation. Growth stocks have had a great run in the last decade when inflation has been conspicuously absent. Value stocks, on the other hand, have recently made a comeback. Their success is likely to continue in the current environment. Number 3, commodities. Gold and other precious metals, as well as raw materials and other natural resources, are examples of commodities. Simply put, as the economy's demand grows, prices rise, and the cost of production to meet that demand typically rises in lockstep. During times of uncertainty, commodities are commonly viewed as safe haven assets. Commodities, unlike stocks and bonds, do not pay dividends or represent any underlying business. They are also uncorrelated and move in opposite directions. Number 4, TIPS. TIPS, or Treasury Inflation Protected Securities, are marketable U.S. Treasury securities designed to combat the erosion of purchasing power. TIPS benefit from periodic inflation adjustments, which are not available with traditional fixed-rate bonds. TIPS should be considered as part of a lower risk portfolio segment for investors seeking capital preservation and purchasing power stability. TIPS holders can rest assured that their principal will be returned because TIPS are backed by the United States government's full faith and credit. Number 5, I-bonds. Savings bonds in the United States become attractive investments during inflationary periods. I-bonds promise to keep up with inflation despite the fact that you only buy $10,000 per year and they're considered non-marketable securities. Like TIPS, they provide a nearly guaranteed return of capital. Investing in I-bonds will not yield high returns, but it will preserve purchasing power for a portion of your portfolio. Given that many investments such as cash and long-term bonds are likely to lose real value during inflationary periods, it makes sense to consider alternatives to stocks that can keep up. As such, we can establish that inflation is an opportunity. Consider inflation as an opportunity to reevaluate your entire portfolio, as it happens whether we like it or not. Despite recent increases in inflation, interest rates remained near record lows in August 2021. Making sure you're adequately diversified and fully invested on a regular basis is one of the most effective methods to battle inflation. Stocks outperform inflation over time, whereas real estate, commodities, TIPS, and I-bonds can only provide further diversity. Cash on the sidelines will lose value when interest rates rise, while long-term bonds will be impacted. In general, inflationary periods, whether temporary or permanent, provide an opportunity to review your financial situation and make adjustments for the future. Thank you for watching this video entirely till the end. Nothing helps me out more than y'all sticking it out until the end, so please consider subscribing to my channel if you haven't done so already. Also, if you enjoyed this video, please like this video and subscribe to my channel so that I can continue to make videos like this for you to enjoy.